Students, let's discuss one more important accounting principle in this lecture. And this accounting principle is objectivity concept. What do you mean by objectivity? Students, in accounting, objectivity means accurate, true, and authentic. It means what are we talking about? We are talking about the books of accounts. Firstly, you need to understand the accounting process. Students, you must know, firstly, we identify the financial transaction, and thereafter that financial transaction is recorded in the books of accounts. Recorded. It means at the time of recording, we need to take due care. And what care is required? Whatever transaction is recorded through the books of accounts in journal, journal proper, cash book, and other subsidiary books, that should be supported by supported documents, verifiable documents. It means supported documents are important here. Supported and verifiable documents. So try to understand this, students. It means each and every transaction which you are going to record into the books of accounts must be based on verifiable document. The document which can later on be verified. And what kinds of documents are these? I tell you. When you buy a product for cash, buy goods for cash, you get a cash receipt. If you purchase goods on credit, you get invoice or the bill. It means every transaction whenever is recorded through the books of accounts, that must be based on cash memos, bills, agreements, and the invoices, etc. And these bills should be genuine, original. Why so? Because later on, if somebody puts objections on the accounting records, or there is some doubt in the accounting records, what is the way to prove that these records are accurate and authentic? These are the supported and verifiable documents. Therefore, whenever the managers, it is for managers and accountants who are responsible for recording, maintaining, and ensuring that these records are authentic, proper, systematic, accurate, and true. The managers and accountant needs to ensure whenever transaction is recorded, you must have bill, you must have cash receipt, cash memo, invoice, or copy of agreement for that. Then you create the voucher, and based on that you record it into journal, journal proper, cash book, or the other subsidiary books. And listen, students, this is equally important for small size organization and big organization as well, because this is the requirement as per law. You can say this is a legal requirement also, because in the court of law, if you need to face some legal issue, there also you have to show your records, and if records are supported by verifiable documents, it will be okay. And while raising loan from banks and financial institutes, again you need the supported and verifiable documents. It means whenever any accounting transaction, any financial transaction takes place, the accountant must ensure and must produce what? The documents. Documents means cash memos, cash receipts, bills, invoices, or copy of agreement. Then based on these documents, students, vouchers are prepared by the accountant. These vouchers are signed by, these vouchers are, I write here, these vouchers should be signed by accountant, and then manager or the boss, head of the institute, and then only these are recorded through the books of accounts, journal proper, cash book, and other subsidiary books. If this process is followed, then we can say that the accountant and managers have followed the accounting process properly. And a lot later on, this process, if they follow this process, it helps them to maintain the records accurately, systematically. And because once this process is followed, you can say your accounting records are 100% true and accurate, and you can produce these documents, because based on this later on we prepare the ledger, we prepare the trial balance, then income statement like profit and loss account and balance sheet is prepared, and you have to get it audited also with the help of chartered accountant. And once this process is followed properly, based on the supported verifiable documents, you can produce these accounting records in the court of law. You can produce these accounting records in the banks and other financial institutions for raising loan without any objection. And in case if any inspection, any inquiry, that is undertaken by any government department or income tax department, then you are safe, because your all records are supported. These are based on original bills, original cash memos, genuine receipts, agreements, and the invoices as well. So this objectivity concept ensures that your accounting records are completely systematic, accurate, true, and authentic, because anytime anybody can get these records verified with the help of the supporting and verifiable documents. So students, I believe the concept, this objectivity concept is clear to you. For other accounting principles, visit the channel and watch the videos properly, because this is must to have a proper and good knowledge of accounting. No doubt that helps in scoring good marks also. Stay connected, improve your knowledge, share the video with your friends and classmates, and subscribe the channel if not yet subscribed.